Bitcoin bounced 7.5% from 63,895 and is now sitting around the 69,000. So the question is, was that the final shakeout? Because what happened during that bounce was not retail buying, it was coordinated accumulation. We saw on February 25th, in a 30-minute window, we saw something unusual. Binance absorbed 29,000 Bitcoin, that's $2.5 billion. Kraken grabbed 8,600 Bitcoin, Wintermute added 7,100 Bitcoin, and Satoshi Ear Whale added 7,500 Bitcoin, roughly $500 million. That's not panic buying, that is positioning. Even more important, daily selling pressure stopped for the first time in 2 months, and that tells you something shifted structurally. This wasn't a random bounce, it was absorption. If we look at the ETFs, on February 24th, after a selling streak, ETFs flipped. Fidelity, $82 million inflow. BlackRock, $78 million inflow. ARK, $71 million inflow. After days of bleeding, flows reversed aggressively. Institutions don't chase noise, they front run clarity. And that brings us to the volatility window. Now, on February 27th, there are 115,000 Bitcoin contracts expiring. That's nearly $7.5 billion notional. Max pain is $75,000. So when open interest clusters and max pain is above price, that level becomes a magnet. Right now, Bitcoin is at around 67, 68 K as we speak, and max pain is at 75K. That's around $7,000 gap. If momentum holds, the path of least resistance into expiry is up. But there is one more catalyst in all of that. Yesterday, there was a meeting on Bitcoin market structure. Regulatory clarity is expected on March 1st, and market price certainty. If we get constructive language, this rips. If we get hostility, we reject hard. So February 27th, expiry creates that volatility window. March 1st creates the confirmation or rejection. This is a compression phase before expansion. And we saw this massive accumulation from exchanges. So in terms of trading, the levels that we're looking at, 68,000, that's reclaimed support for Bitcoin. $75,000 is options maximum pain resistance. And $63,895, that's the invalidation level. If we go above 68K and we hold there, the structure favors a push towards 75K level. If we lose the 63,895 level, the entire setup resets. Risk is very defined here. The opportunity is asymmetric though. So we keep observing that, we keep looking, because we saw massive whale absorption, we saw ETF inflows reversing, we have options expiring that create a magnet at the 75K level, and we have the regulatory clarity in days. This is not random price action, this is compression before expansion. And if history repeats, if these signals remain, I think we might be even having the bear market bottom already in. This is just an educated guess. The next phase will start very soon, and we will see. If we break below the 63K level again, this pattern is invalidated. In the meantime, keep your eyes on the charts, keep accumulating if you have the chance to do so. If you want to see what I'm buying, what I'm selling, feel free to join Discord. It's available there, and I'll be very happy to welcome you as part of the community. You'll find links to all my social media, to my course on Udemy. You will also find link to my Discord and other bundles in the description below. Thank you for watching. I'll see you in the next video.